Welcome to the RSI Trade of the Day. My name is Benjamin Poole, head trader here at Verified Investing, with another exciting show. You know, we've got some exciting action for you guys. Thank you guys for tuning in every morning. The market is open, 8:45 in the morning. APP has been on a surge today, you guys. I have something to show you guys in the charts. The relative strength index on the daily time frame and the intraday time frame is just going bonkers. I'm going to show you at the end of the show where it is likely to head, where to pull back or bounce from. You guys want to stay tuned to that. But before we get started with all that, let's go ahead and go into the RSI recap. We had Intel on Thursday that had a really strong RSI pattern with the price action, which indicated that price should continue higher. And then I had a targeted entry price for those aggressive traders. If you were one of those aggressive traders, you would have taken over 5% in the pre-market today, and never got to our second or my trade of the day. However, it just showed how much resistance that first level was. So let's go ahead and just jump right into that. And like I said, go into the RSI recap. So here we go. Here is the chart of Intel. So this is what happened on Thursday. So Thursday, the relative strength index stayed high on the charts, with the price action staying even higher. So what that told me was that INTC was likely to make a move higher, and that's exactly what happened. So if we look at the daily time frame on INTC, you had a lot of resistance right here at $36.28. Not only did you have all this price consolidation, but you also had this red bar high right here. It almost formed a double bottom. I was targeting this gap fill at $37.63, going back to the intraday. However, price action wanted to get rejected right at that $36.20 level or 28-cent level. And now it's down in the pre-market almost 5%. That's an incredible pullback on the INTC chart. Now what the RSI is telling me is that Intel is now caught all of the bid that it has. And now if it gets back into this gap fill, this could be a bounce opportunity. So basically a pierce of $34. It's a little too aggressive for me, even though it is down off of that high about 5%. I'm going to go ahead and stay away from it based on the daily RSI. I needed to pull back a little bit more than that. So right now, INTC is overbought. And so if it gets back down to about the 70 with all this market sentiment, with Apple investing in it, NVIDIA, the government, although it is a little too aggressive for me, this gap fill would be a great buying opportunity if you guys are really aggressive. All right, another chart that I was looking at is QBTS. You had this beautiful upsloping trend line. So I love to draw these trend lines from a high pivot to a high pivot, connect these two pivots, and this shows you where price action is likely to get rejected. It's still kind of right at this area. So what I'm noticing is the RSI is getting some negative RSI divergence. So what that means is price action is heading a little bit higher, while the RSI is heading a little bit lower. So for me, if price action can get right below this upsloping trend line, then price action is likely to head back probably to this double top area, right about the $20 area. So this is where price action is likely to head back. And also, it would be a great buying opportunity, especially if we can get QBTS back below the 50 on the RSI. So this, again, would be a great opportunity. If price action does end up heading higher, it's going to bust through this $27, and then I have an upside target of $35.74. All right, HIMS is another chart. Look at this on the daily time frame. So here's what happened on Friday. The relative strength index stayed high, never dropped below the 30, and then the price action just continued to climb. And then towards the 11 o'clock time frame, 12 o'clock, you had this beautiful beautiful bull flag that set up. And now looking in the pre-market, $59.28. So you go to the daily time frame, and $64.05 is where I have price action getting to. So same with on the when I like to draw trend lines, I connect high pivot points, but I also like to connect low pivots. So on HIMS or HIMS, you have this nice low pivot on the 22nd of April, secondary pivot right here on the 26th of June. You connect these two lines, and then this was the third hit that hit on the 22nd of July. Price consolidation here. So as price action gets back up into this trend line, it is likely to get rejected. Not only that, but you've also got this red bar pivot right here, as well as this green bar pivot. So for me, this indicates that there's going to be a lot of selling pressure. So on a day trading basis, I would take this on a short at a Pierce of $64. So that would be a great move. The daily time frame RSI isn't overly extended. However, you could get a nice 3, 4, 5% pullback from this level. On the daily RSI, I mean the intraday RSI, it is indicating that price action is likely to continue higher, and so I love this for an opportunity for a short if it does go up a little bit higher. Oklo is one that I had noticed a couple different times. You go to the daily time frame on Oklo and look at what price action can do. So a lot of people like to get into the into a short trade when the RSI is above the 70. But had you gotten into the RSI when it was above 70, I want you guys to see what's happening on the charts, right? So the 70 is an overbought condition. However, it doesn't give you an indication of the or a guarantee that there's going to be a pullback, especially when you get a meme stock like Oklo and earnings. I mean, excuse me, not earnings, but options plays coming into effect. You can get a nice push above the 70, and Oklo pushed well above the 70 and got up to almost 90 on the daily RSI. So here again, here's the chart of Oklo. Nice move to the upside. Look at the RSI, got to close to 90 like I was mentioning. Price action continued higher. Now, had you got in at the 70, look at how much you would have been out of the money. You would have been as much as 49% out of the money before an eventual pullback. So what I did like is that price action did continue to creep a little bit higher. The RSI just barely crept a little bit higher. We ended up on the day trading basis, we did get in this a little bit earlier than anticipated. We got into it at about $118. So we were still out of the money. But then we had a nice pullback, took about a $30,000 gain on this in the day trading room. Had to hold it for a couple of days. But when you get an overexhaustion of buying pressure, it is likely to pull back. So now if buying pressure ceases and you can get this around $105 for a small day trade, I think that would be an awesome level. All right, guys, now let's go into APP. Look at the chart of APP. The RSI on the daily time or intraday time frame, the RSI stayed well above the 30 until about 1:30 in the afternoon, where it dropped below the 70. The 30. However, did you notice that price action never closed below a bunch of pivots? So that would indicate that there is still a lot of buying pressure in APP. And look at what happened in the pre-market. We're up to 686, and this is incredible. Now you switch to the daily time frame on APP and look at this pivot. So this isn't a very clear pivot point. So every once in a while, you have to go and look for hidden trend lines where price action didn't necessarily get support or resistance exactly the way you anticipated it. But sometimes if you look deep in the charts, you can actually see that there is a technical support or resistance level, in this case, a resistance level. And so price action is likely to head back up or all the way up to $701.48. So I connected this pivot from the September of 2024. Here's a hit from the above time frame on the 13th of January, and then the secondary hit right here on the 12th of February, 13th of February, before this fall below this upsloping trend line. So when price action gets into this trend line, it is likely to get rejected. And so 701.48 is that shortable level. So my RSI trade of the day, a short APP at a Pierce of $700. And like every other trade that I have on a 15-minute closing basis, if it closes above our entry price of a Pierce of $700, then we're stopping out. So a chart that's overly extended like this, negative RSI divergence, price action heading higher, RSI heading lower, This is going to give me at least a 3 to 5% pullback. And so that's what I anticipate. Really tight stop out, a close above our entry price at a pierce of $700 on a 15-minute closing basis. That's my stop out, and looking for a 3 to 5% pullback. Awesome. Well, thank you guys for joining in with me today. I really anticipate APP continuing higher. That's going to be a great level. On the downside, if it gets all the way below $600, I would love this thing to pick up for a long trade. You've got a lot of support, and then I would add to the position at around $525. So that's what I have for you guys. Thanks again for joining me every morning. The market is open at 8:45 in the morning. Please, if you guys like this content, like, subscribe, follow, ring that bell so you can get notified of other additional opportunities for us. And then Gareth Selloway is going live in my trading game plan in less than 4 minutes. You guys don't want to miss that. We'll see you guys next time in the charts. You guys have a great rest of your day. Take care.